Hello, Mark Sturdy here, and a brief summary of our work this week is to follow. You will see that we've resumed our selling of the dollar against the euro, and we are resuming our bullishness on the Nikke. We think that's broken up and looks set to go further. We have pulled back from our gold situation. We think it's long-term flat. Short-term flat and uncertain. We remain faithful to the bull trend long and medium term, but short-term it's very lacking in clarity. Let's go through these one by one. Here is the new news. The dollar looks set to resume its slide. This is the long-term chart, which remains very bearish, we think, for the dollar. And here is what's happened. We have broken above the trading range. So two things have happened. The market's bounced off twice from this band of support, 115.73, 114.73, and not just that, so it hasn't just remained in the trading range, but bounced off that and has broken out of the top through 118.29. So we think that is a good, exciting move. Here is the pullback in the dollar from over the week before last. And here is the bounce from the prior high, 118.07 in the very short term. Our other excitement was the dollar yen. We like this because the big picture is so bearish of the yen, which is this triangle here, which was formed around the prior high of 147.63 from 1998. It has broken up. This is the triangle in the medium term. It has broken up. It is the pause and pullback found support on the top of the triangle and has now bounced. Now, brave bulls will want to buy here. Others will, bulls of the dollar against the yen, that is. Others will want a break of 158.87 for clarity and confidence. But we think this is going up. So short term, we remain a little cautious. Others will given the context and the surrounding patterns, will already be in there selling the yen. Let's look at the S&P 500 just to clarify. There's the good bull market, which continues. Here is the pause since mid-December. Here in greater detail is that same pause, and the failure of the market to break up through 170.14 is a cause of some anxiety to chartists. The bottom, the support has twice been tested severely from these prior highs, 66.20, 65.81. So the market looks in good fettle, but it's struggling to get up through here. Cautious folk will want to wait for a break of 70.14. Even optimistic folk will want to wait for a break of 170.14. Eurostoxx, the bull market's intact. The overall context is incredibly bullish, having broken through 55.24. But the pause since December is a little more interesting than the US market, the S&P. The market's failed to break down through the bottom of this trading range, 58.47 three times. It hasn't broken through the top once again. Aggressive bulls will be long, in line with the trading range medium term, in line with the trading range long term. Cautious bulls will wait for a break of 60.72. The FTSE's looking very bullish, influenced by oil doubtless. It is in the grip of this continuation head and shoulders. It's reached the target for that head and shoulders, but it's going strong and is more bullish than the others, no question. There's the slight pause of the last week. Notwithstanding that, the market's bullish. We should perhaps be more bullish than we have done. It's looking good. Even better is the Nikke 225. Once again, has rather like the Dow Jones Eurostoxx, the break up through the long-term prior high, 39,600. It's the big picture. The medium-term picture is the completion of this triangle sends it up to these current levels. It wants to go further because, as we've seen with the other markets, there has been a sideways price action since the beginning of the year, but that has unambiguously broken up. And so we're bulls. Bonds, we think, are fraught with uncertainty. Here's the long-term uncertainty, a trading range in the US T-notes. Here is the higher yield suggestion from the medium term picture from this head and shoulders reversal. But here is the short term uncertainty, how lower prices are implied by this yield chart, and yet we need to. The bears will want to. They're interested that we've failed at these prior highs here price wise, but I think cautious folk will want to wait for a sell through 111.20 on the price chart. The Bund is similar, so is the gilt. Let's just look at the gilt. The sideways price action since the beginning of 2025 in gilts. We thought it might have turned into a higher yield head and shoulders reversal, but it hasn't. Bounced back through the neckline. Great uncertainty. We need, I suppose, for the bears to see prices beneath 89.86. We're close to them, or yield chart wise a break up through this trading range, stand back and wait for a break of the trading range here, or through the lows of this trading range, which is 89.86. Prices and yields. Oil, well, it's within a long-term trading range. It has been rallying since mid-December. The rally is quite well structured, bouncing off prior highs, and it's near support here at 62.20. But so it's a trend, a bull trend. It's not that powerful a situation, I don't think. Here's the exponential curve of the gold. Here is the medium-term sustaining nature of this trend by creating continuation triangles. Here is the pullback in the market. It found support exactly where you'd expect it to find in a bull market, which is the prior high, 43.98. So we're slightly in no man's land here, since we are without impetus from those patterns, and these have lost their impetus too. The trading range, as I say, there's no trading range here. It's good support at 45.99 and beneath those successive highs. So the market could go anywhere short term from here, stand back. Thank you very much.